Hi, everybody. Chris Engelbert with Engelbert Financial Advisors in beautiful Allentown, Pennsylvania. And we now have the March 2025 update. We're bringing it to you. And guess what's on everybody's mind? Actually, what's very interesting is that this is actually a cartoon about the trade wars and tariffs from 2018. And you can recycle it now because obviously the new administration is all about tariffs. Now, one of the things that I want to talk very briefly about as far as tariffs go, because what's happening in the media is, again, they're sensationalizing with headlines, Trump evokes trade wars, and you hear the word trade wars. I just want to make a point that if you've ever traveled to Europe, what ends up happening is if you look at automobile sales in Europe, there is virtually no American-made cars being sold in Europe. Why? Because there's an almost 25% tariff on US autos in Europe. And so people are saying, well, I'm not going to buy a US auto because the tariffs are so high. Meanwhile, we allow Volkswagen, Audi, Mercedes, etc. to sell products over here with virtually little or no tariffs. So one of the points I've been trying to make to clients is that in the short term, trade wars, tariff talks is always very concerning to the investment markets because people don't know who the winners or losers are going to be. Also, in the short term, if you want to move more productivity and more manufacturing back to the US, it takes several years to move that back to the US because you got to build plants and etc. Many people forget that we learned during COVID, it's not really good to have all of your computer chips made overseas. So in 2021 and 2022, they passed the CHIPS Act, and there's several large manufacturing facilities being built for computer chips in Ohio, in Arizona. They're not coming online till 2025 late and 2026. Now, once those manufacturing facilities are established, your US economy then turns around and does better. But in the meantime, there's a lot of unknowns and there's a lot of volatility, but we are not panicking at this point in time because we've been talking about sequence of returns as far as the S&P 500 and the NASDAQ go. 8 out of the last 9 quarters for the S&P 500 have been up. Right now, the S&P 500 closed on December 31st at 5881. Currently, as of this video, it's around 5,700, which is also the 200-day moving average. We had gone over 300 days without the S&P 500 hitting its 200-day moving average or closing below it. And for example, in February, we're down 5% from the highs, but year to date, the S&P 500, as of this video, is down about 2.5%, almost 3%. So we think that March is going to obviously maybe be a little bit of a rebound, but the first quarter of 2025 is going to be a negative quarter in the equity markets, especially the NASDAQ and the S&P 500. Again, why are we getting this selling? It's because of the over concentration in the Magnificent Seven stocks. Right now, the Mag 7 ETF, which obviously holds Meta, Microsoft, Apple, Amazon, Google, NVIDIA, and Tesla, has just hit its 200-day moving average as of this video. I would not be surprised if we see some kind of bounce for the averages off the 200-day moving average. But again, one of the things that happened was last year we had 3 pullbacks of 5% and 1 pullback of 10%. This pullback might be a little bit deeper than what a lot of investors expect. That's why we've been very defensive the last couple of months. Now, what's happening as far as interest rates go? We are seeing that interest rates have kind of hit our downward target for the year. I figured the 10-year this year would get around 4%, 4.25%. Now, a lot of people are trying to figure out, is the 10-year telling us that we're going into the recession? If you look at the Atlanta Fed GDP Now model, which Google it and it will come right up, the Atlanta Fed GDP Now model forecasts GDP, which is gross domestic product, which tells you whether or not the US economy is in a recession. It went from over positive 2.5% for the first quarter to negative 1.8%. Now, one negative quarter as far as GDP or growth does not a recession make. But typically, the definition of recession is 2 negative quarters in a row of GDP. So again, we're watching the Atlanta Fed forecast to see if the second quarter of 2025 is negative as well. And that would mean we'd obviously be in a recession or have been entered into a recession. Some people believe that we entered into a recession in the third quarter of 2024. But remember, the Fed has been holding steady on short-term interest rates for the last 6 months. The question is going to be, this summer, are we going to get a Wile E. Coyote moment? Remember those cartoons when you were a kid where Wile E's chasing the Roadrunner and the Roadrunner goes off the cliff, but he's got wings and can fly away, and Wile E. Coyote plummets down? That's the question. And is the bond market telling us that we are going into a recession in 2025? If you see the 10-year yield break below 4%, I'm pretty confident that means we're going into a recession in 2025. Right now, we've been talking about overweighting bonds for 2025 because, again, over a 20-year period of time, bonds outperform stocks 4 to 5 years over a 20-year period of time. Bonds have only outperformed stocks over the last 20 years 1 year. So we think that this could be the year that bonds end up outperforming stocks and giving conservative investors a better rate of return than somebody that's in the stock market. Now, again, we don't mean to say sell out your entire stock portfolio, but what we do believe is that it's going to be a little bit tougher to make money in the stock market this year. So let me sum it up by saying, obviously, February was a down month for the S&P 500. So far for March, we've continued to see a deceleration as far as the stock market goes on tariff and trade war talk. We truly believe that the first quarter of 2025 is going to be a negative quarter. Interest rates keep falling, and the question is that signaling a recession for 2025? Now, the other trend that's out there is that this overcrowding in the Mag 7 trade, where everybody was buying those stocks and figured they'd go up forever. Remember the Nifty 50? You might want to Google that. There was a Nifty 50 trend in the 1960s and 70s where there was 50 stocks that if you just bought them and held on to them forever, you were going to make money. The Nifty 50 trend ended badly. Now, the Magnificent Seven strategy looks like it's reversing and favoring more diversified investment strategies. Again, we're favoring small mid-cap stocks. We're favoring value and dividend stocks. We are adding to those on pullbacks for clients right now. And we do believe that a more diversified, moderate portfolio is going to do much better for 2025. So that's the March update. As always, you can see this video. We put it on our app. So download my app by texting Chris E, CHRISE to 36260. We have a lot of good content on our app. We are going to be doing another trade talk soon. We have the first quarter 2025 trade talks on my app where you can view that as well, where we talk about gold and what's going on with it. So you might want to take a look at that. And again, as always, if you have any questions, feel free to reach out and we are more than happy to talk to you. Everybody have a great week. Take care.